Hello and good evening. So this is the weekly outlook for Nasdaq and SP500 for the week that runs from today, the 9th of February 2026 up to 13th of February 2026. So um on these two, we are still currently in that range. We haven't yet been able to break out of that range completely as we should, but still we are getting some trade ideas just within the range. So although it's we are trading very cautiously, but we are getting some trades inside that range. So last week I was actually very confused last week because in the beginning of the week, or when I did the weekly outlook, I wanted to see higher prices, but then something happened on that Tuesday that we had a change instead to the downside. So I quickly changed my weekly bias and started to target this sell side liquidity, this sell side liquidity after we had that change in state of delivery on Tuesday. So this was the change in state right here. We had this change in state, and immediately I knew that we had some sell side liquidity left open right here and right here, which was also in some form of trend line liquidity. So I knew that we were going to sweep that. So I changed that, and but in the weekly outlook I had not mentioned that we might be retracing lower. So yes, I thought it was important to get that out of the way before I continue. So back on the weekly chart, as I have mentioned, we are currently on this range. You can see that we have not yet been able to break out of this range. We are just ranging, trading higher, trading lower, trading higher, trading lower, but still within this low and this high. So that is, we could label that as our current dealing range. And um, so you can see that that's our current dealing range. And you can see that, for example, last week price moved from a level of premium zone, and we dipped into discount way below the 0.25 level, and we retested an important level. This was an NOG. It's more visible on a daily chart, the NOG. So you can see it right here. This was a Friday 21st November, and this was Monday 24th November. So we opened with a gap. You can see that price retraced lower and retested that area. So we are in that range currently, and even on a daily chart now you can see it better that we are actually in a consolidated range. So we have not been able to break below above this high or this low. And uh, other than that, let's go back to the weekly chart and now get some weekly levels for this week. I actually wanted to sit this week out, but then I remember that last time I mentioned that I'm reducing the level of technical analysis I am doing on the weekly chart. For example, labeling the change in state. I just need to see some order blocks and maybe how the candles reacted to it, the open, the close, and the bodies and the wicks. So that being said, let's look at how the bodies, the last week's candle printed. So looking at this body, you can see that we swept. So we were targeting this sell side liquidity. So this was sell side liquidity, and then this was sell side liquidity. And I have also mentioned the new day opening, the new week opening gap that was targeted on the daily chart. So you can see these two. These were the liquidity that was being targeted, and I really wanted to see how price would react on those levels on both a daily level and a weekly level. So on a weekly level, you can see that the body, we swept all that liquidity, dipped into this new week opening gap, and then price went back up and closed above the first sell side liquidity that was being targeted, which was a previous week low. So not actually a previous week low, but uh, maybe it was just a week behind. So yeah, you can see that we were able to close back inside that range. And from what we know about a candlestick formation, you can tell that you can I have mentioned in the gold outlook video that the wicks break the rules and the bodies tell the story. So from that analogy, we can say that the bodies are telling a bullish story right here, because we swept this liquidity, dipped into this new week opening gap, which is an imbalance, and then we went all the way back inside that price action. So that tells me that price does not really want to spend any more time in these levels, and it's ready maybe to displace to the upside, although we are still in that consolidation. Now we can start to look for other imbalances and buy side liquidities inside the premium side range of this consolidated range, so our current dealing range. And going to US 500, which I also analyze alongside this US 100 Nasdaq, you can see that we had the same thing happening. So we swept this liquidity. These were the same levels I had marked on. We had that sell side liquidity being swept from a weekly low in January. We had this being left open, so price was not able to reach here, which is now will be added to my confluence as SMT. So you can see that this was left open. This was the 15th December week and the 15th December week right here. So you can see that we swept that and dipped into the NOG. But on US 500, which has actually been more bullish even in this type of consolidated range price action, we have been having higher highs forming throughout, even in the consolidation. So you can see that price wicked into the first sell side liquidity level, swept it, but was not able to sweep the second one, and it did not retest this level. So this now becomes a level of SMT where we have a lower low and a higher low. So the higher low is on um, SP500. So we label this as SMT with Nasdaq. So the same thing. So we can now delete this sell side liquidity swept, but this is just to keep the chart clean. But you can keep them in your own chart if you would like to see them, but it's not that important. So here we have SMT with SP500. Okay, so liquidity swept, imbalances rebalanced, and then now we are going to the upside. So you can see that we actually went all the way back inside and closed below the previous week high on this SP500. So that is a very bullish sign. So this could be labeled as a previous week high from last week. So yes, bodies tell the story, weeks break the rules. So which rules did the week break? They went down to the lower levels, swept liquidity, and then on US 100 we swept liquidity and also rebalanced and imbalanced. So on US 500, which is more bullish, we were able to actually get a close above that week's open. So that is a very bullish sign on price action. And I had mentioned today in the morning that I did not have setups today, but I actually think I have a setup, which you will see in a few. So let's go to the daily chart. My targets should be basically the all-time high on US 500 and the same thing on Nasdaq. So these are actually relative equal highs on a very high time frame. So this is a very good draw on liquidity this week. So this, I'll label this as REH. So this is relative equal highs. So that is my draw on liquidity this week and even higher depending on how price will be moving. So let's go down to the daily chart, having talked about that on the weekly chart. So you can see that we had this last down close candle on Thursday, which dipped into the NOG and actually closed below that 50% level, which would mean that price wants to displace lower. But then look at what happened on Friday. Instead of displacing lower, we had that change instead to the upside. So this is why I'm saying I might have a setup today, and I thought I didn't, but I'm seeing now that I do. So we have that daily change instead of delivery right there. Don't know why this is lagging. Yes, so this is a daily change in state of delivery, which is a very strong PDRA according to the way I trade. So soon as I have that, you know that I usually go to the 4-hour chart, but let's just go take this slowly. And so we have this SMT, where 15th deck low, 18th deck low was not swept. So you can see the last down close candle which swept liquidity from 21st January. You can see that we had that liquidity being swept, and then price came back all the way to close above it, and also closed above the new day opening gap. So what does that tell me? It tells me that now price is ready to start displacing to the upside again. So we have this end dog. The end dog has been this we actually have price closing above and outside two end dogs. So we have another end dog here between Tuesday's price action and Wednesday's open. So that's yet another end dog, and you can see that all that was done in one candle, Friday's candle. It formed the change in state, closed above these two gaps. So that is a very strong PD array. And then additionally now we are adding to the source of this trade, and you can see that we have this this is another new day opening gap, which is from today's price action. So it's actually an NWOG because today is on a Monday. So same thing on Nasdaq, US 100. We actually closed above. Yes, we completely filled the end dog. I know this chart will be dirty, a little bit dirty, but you can keep up. You can keep up. This is an end dog. It was completely filled, so that is the end dog from Wednesday and Thursday, and then dipped into the end dog, changed instead to the upside, completely filled the end dog, and then today opened with a new day opening, a bullish new day opening gap. So as usual, I want to see this being respected as price maybe retraces lower throughout the week, maybe to form a weekly low or something, or maybe just classic do we call it internal range liquidity to external. So we might dip into these levels, but I want to see them holding price to the upside. I would not want to see a body closing inside of these levels. So maybe we should just delete this and make it a little bit cleaner. So you can see that we have this end dog. So I'm saying I might have a setup today because we already have a change in state, which is a daily change in state of delivery on the two assets. So they are in sync. Daily CISD. So what else am I waiting for? I go to the 4-hour chart to look for what 4-hour to look for a retracement to the downside, which I believe we got today in the New York, not the New York, in the London kill zone, which is a very good retracement. It's one of my best trades when I get a retracement during those hours. So notice that we opened head to 4-hour candles, drop to the downside, where we reached into an area of imbalance on a 4-hour chart. So now you can see that we're starting to get some more PDRs as we go down to the lower time frames, the 4-hour and so forth. So let's label that as a gray one. Let's see if we have the same thing. Yes, we dipped into the upper quadrant of this fair value gap. So this is a 4-hour imbalance. Price opened, filled the end dog or NWOG on a 4-hour chart, and then that candle that dipped into that area of imbalance has already been traded against. So if we get a close above this level now, so now this is where the setup actually starts forming and actualizing. So this will be a 4-hour change in state of delivery, but for now it will be a last down close candle level, a 4-hour last down close level. So we will label it as a 4H LDC, and I want to see price close above it. So and then we can now start looking for entries on a 15-minute, targeting this relative equal highs, this buy side liquidity, and so forth. So having mentioned that, so yes, I think I will be taking this trade in the PM session. So you can stay tuned in my channel for that trade. Yes. So on a 4 hour, I have this last down close candle level, 4H. Then now after doing that, all I do is wait for the setup to form, because this is now the 4 hour outlook. And then I can target this relative equal highs on Nasdaq, and I'll know where I'll take the trade, probably on SP500, because it's been the more bullish one and it formed the higher low, so I expect it to displace higher better in a better way. So I'll probably be taking that trade on SP500, but I will update that on my group. So yes, let's see if we'll get that set up. I will now, if this closes above, I will go to a 15-minute. I will wait for such a thing to happen, where we will get a 15-minute retracement, maybe into an order block or an imbalance, and then I will wait for a 15-minute change in state of delivery. Then I will wait for a retest at that level, and then I will take my longs from that position and target the buy side liquidity that's resting here, and the relative equal highs here, and maybe higher. So uh that's it on, I guess that's it on the two. I have done a top down analysis from the weekly to the daily, and then today you are in luck because we actually have a setup forming. So it has been actually a top down analysis of how basically my trades look like. So I will be taking that setup if it forms this way, if we get a close above that level. So looking at the fundamental analysis, I have also done this on gold. So this week you can see that we don't have the NFP or federal fund rates, which are the ones that I really care about, the kind of data they give us. So this week all the news will be at 4:30 p.m., which is 8:30 a.m. New York time. So anytime New York open from 10 or from 9:30 and 10 a.m. New York time, it's clear skies for trading. And also the London session is good for trading, because we only have news at 8:30 open, which is also an open in this when you are trading indices. So avoid trading at that specific hour between 8 and 9. So anywhere before that you can trade, and also anywhere after that you can trade. So that's it for me on both the technical analysis and the fundamental analysis. I wish you all the best this week as you trade. So trade safe, and I'll see you in my channel if you're in my channel. So the Telegram link is on my the description of this video. It's free. I share my setups there. So even this setup that I will be trading will be shared there. Thank you for listening, and if you haven't subscribed to my channel yet, kindly subscribe. I will appreciate. Yeah, trade safe. Let's get it.